So, hi guys, welcome back. Today we'll be looking at Mama Mancini's holdings, ticker symbol MMMB. I believe this stock is a hidden gem in the current market. It's a dirt cheap stock with a very high growth potential in the future as well. And today we'll be looking at the future growth of this stock and the valuations of this stock as well. If you do enjoy, consider subscribing. It's free and it helps me out a ton. If not, thanks for watching anyway. On to the video. So about MMMB, it's an Italian food company, but the growth of this company is like a tech company with its revenue and earnings growing regularly more than 25% per year. It also has very high insider ownership, showing that the people within the company believe that this company's stock price will do very well in the future. 2021 has a lot of growth prospects to push this stock higher, and we'll be going through that through this video. And what sets it apart from competitors is its health benefits. It's much healthier than any of its competitors in the market, and that's why it has more sales alongside its growth prospects, which we'll be going through later. And with these growth prospects as well, you don't have to worry about what you have to do with a tech stock, which is the competitors in R&D. Here, the competitors, you don't have to worry because of what we'll be going through. It's what sets it apart from its competitors, why it's getting extra sales and stuff. But it doesn't have to worry about R&D because that's not relevant in the food industry as well, and that's the biggest threat to tech companies in the current market. So here you're getting the growth of a tech company while the value of a food company. So it's the best of both worlds. So looking at the growth prospects, we'll be looking at how it operates in stores, how it spreads out to other stores, its company partnership, and its entry into food service. So into how it operates into stores. So the way MMMB attracts most of its customers is by operating on the perimeters of stores. So what a perimeter means, if you look at the bottom right, so you have the red part of the store, which is the center of the store, and each year it has 1 to 2% decreased customers. And on the edges, the green part, you have the perimeter of the store, which has 8 to 10% more people going to the perimeters of a store per year. So basically what happens is that MMMB operates within that green section, and because people are busier and spending less time shopping instead of going to the center part, they just tend to stay around the edges. And while it hurts of its competitors, it actually helps MMMB because it attracts more customers, allows them to make more sales, generates more revenue, more profit, and it beats into competitors' market share as well. The fact that this company focuses on health benefits is also a big plus because more and more people are becoming more health conscious, and because of that you have more sales and the benefits there as well. So it also has its entry into food service. So late in 2020 it entered into the food service industry, and with this it will no doubt increase its revenue growth. It would have doubled its market audience and will introduce new streams of revenue. The revenue is set to grow at 10 million because of this, and that's a 20% increase. Its earnings are set to grow at 77% per year next year, which is faster than the US market of 21% and faster than the industry of 25%. Their revenue is also set to grow at 26% per year, which is faster than the US market of 10% and faster than its industry of 15%. So you can see it's growing faster and has a competitive advantage to its competitors as well. So if you look at towards the right, you can see the graph where its revenue is increasing, its net income of profit is increasing over the past few years on a regular basis and a high growth, and that's a good trend for this company to have, and it will carry this onto the future with its food service and other growth prospects. So the next growth prospect we'll be looking at is its opening up in new stores. So you may think with all of this growth that there's not much more to come with this company, but in fact there's a lot more. So if you look at the green parts where it hasn't been selling its products, you can see that some of its largest companies such as Walmart, Kroger, Costco, regional chains, and Target, all of these companies and the group of companies, which is regional chains, all of these have a lot of growth potential and future opportunity for this company because they're some of the largest companies in the market. And if MMMB gets a high distribution and penetration in these markets, then you have a lot more growth in the future. And you could see slowly Walmart, Kroger, Costco, and Albertsons and Safeway. You could see that the red part is slowly increasing over time, and stuff like Target and regional chains are yet to be fully distributed. And with that, you'd see there's more growth in the future as well. The last part we'll be going through is that the partnership. So MMMB has partnered up with Beyond Meat, which is a meat alternative food source. With more and more people making health conscious decisions, it will only make the brand stronger in the future, resulting in more sales, more revenue, and a competitive advantage where you have making sales in the meat industry and the non-meat industry, so the best of both worlds. They're also adding more and more products which they are selling, which creates a larger audience and attracts opportunity to new customers as well. So, or the how it operates in new stores, entry into food service, opening up in new stores, and its partnerships are the growth prospects that will be coming into place in 2021. So we'll be looking at the valuations now. The valuations are much cheaper than the market and much cheaper than its competitors. The P ratio of 22 is better than the food industry of 25, and good value based on its PEG ratio of 0.3. So its PE ratio divided by growth gives you a ratio of 0.3, and that's very good because it has a low PE ratio and a low PEG ratio, which basically signifies that the company has good valuations and good growth. So that's very good. If you compare it to its competitors in the bottom right, you see Hormel, McCormick, and MMMB. So the forward PE ratio for Hormel is 29, for McCormick is 33, and for MMMB is 18. So it's much cheaper in that regard. Its price to sales is in line with Hormel, but much cheaper than McCormick. Its revenue growth of the last 5 years is 25%, which blows all of the other revenue growth out of the market, and its EBITDA, the earnings before interest, tax, etc. 5-year growth is 27%, which is much better than Hormel and McCormick, both of them. So you can see it's trading at a much cheaper P ratio, much cheaper forward P ratio, much cheaper sales, has a low PEG ratio, and high revenue and EBITDA growth over the last 5 years as well. So just some final words about this company. It's a cheap stock, has a high future growth prospects, but the only downside is its low liquidity, because not many people are looking at this stock, and that's why the stock has remained relatively cheap, even though of its good future growth potentials. But as always, do your own due diligence, and thanks for watching.